Hi everyone, great to be with you again today. Today I've got Josie from Tax Debt Solutions and we're talking about tax and how that is fitting in with Australian businesses at this point and some strategies on how to deal with the ATO, noting that they are extremely vicious at the minute. Josie, how are you doing?
Well, thank you, Jack. How are you?
I'm well, thank you. Thank you so much for being with us today.
Thank you for having me.
I wanted to get you in the office because we're going to talk about everybody's favourite topic in the whole wide world, which is tax. But we wanted to delve in a little bit deeper into the mode that the tax office is in at the minute, some of the strategies that they're using and what their goals are, and then how that's how that's affecting small businesses.
Mm-hmm.
And then we can come back and talk to you a bit about what you do in your world and how you can help these sort of people. So I guess where we should start is if you can just very quickly introduce yourself and tell us about your business, and also just give us a little bit of information on what you actually do day to day in there.
Okay. Well, my name's Josie Gangemi and I'm the founder of Tax Debt Solutions Australia. And what we do is we help businesses and individuals that have tax debt. We help them avoid liquidation and bankruptcy, basically by looking at their debt and just analysing it and seeing if they can trade out of their debt.
So tell me, let's just zoom out a little bit and we'll just talk about the ATO and what they were doing during COVID, and then where that's come to today and how that's affecting businesses. So do you want to give me one word to describe the ATO during COVID?
Asleep.
I was going to use exactly the same one. Okay, perfect. And now, fast forward a couple of years to where we are today, present day. Give me one word for what the ATO would be described as today.
2 words. I'd say wide awake. Wide awake.
Okay, cool. So give us a bit of background. What happened during COVID that the ATO were not doing a whole lot? Why was that the case?
Well, I think the ATO were giving out grants, cash flow boosts, so they were unable to collect because you can't collect and provide funding. You can't. So they put a pause on all debt collection and stopped. They even stopped interest on most of debts from accruing every day. So they did that, I think, for a good 1 or 2 years,
Mm-hmm.
and that really assisted businesses. Obviously, all they had to do was then just to keep up with their ongoings, and the historical debt was put on pause. So a lot of businesses were unable to even meet their ongoings. So we're finding that a lot of businesses have not only historical debt from pre-COVID, but also now have debt from COVID periods as well.
It sounds like in that period of time, essentially, obviously, the government was trying to push heaps of money into the system, stimulate growth, get the economy moving, et cetera, et cetera. There was the safe harbour implemented whereby people couldn't be wound up. And it just seemed to be, for the lack of a better term, the economy just seemed to be a bit of a theme park. Where everyone was just having a great old time. Interest rates were, next to nothing and life was great. And now, obviously, we fast forward a little bit and now we're in a position where inflation's running rampant. The government has switched gears nearly from, gear 6 of stimulation to nearly reverse of we're going to grab all this back. And obviously the ATO is doing its job in that in terms of holding hands with the federal government and trying to, achieve those objectives that they've got right now, which is trying to slow everything down and claw some cash back. So in terms of the status of the ATO today, you said that they were the reverse of asleep, which I guess is awake, but they are working super hard to pull some of that cash back in. They seem very not tolerant to to people that are not paying their tax or are flaunting the rules a little bit. So what sort of things do they have in place right now to What tools do they have to get that money back? Those people that haven't lodged a tax return, those people that are not keeping up to date with their arrangements and their arrears payments or whatever. What is the ATO doing to claw some of that cash back and pull some of these guys back into line?
Well, there's some different methods that they're using because people do have quite a few outstanding lodgements. There's a lot of that. So they've come up with a letter that we've seen going around that threatens prosecution if lodgements aren't made. So that quickly gets the attention of the taxpayer and they organise their lodgements almost immediately.
What does prosecution? Sorry to cut you off. What does prosecution actually mean? Like, what is that? What can they do?
Well, I'm not sure, to be honest. It's never real. I haven't seen that next step,
Sure.
but it's very effective. The language you're using is very, very effective because people are, if they don't have a tax agent, they're engaging a tax agent straight away and they're getting their lodgements up to date. So
I'm sure it's pretty effective as a big stick, which is, it just shows how much power they've got that they've just got to say we're gonna do something.
yes,
And
yes,
you don't even know what they're gonna do because everyone cleans it up before that happens.
yes. No one wants to test the waters. The other thing we're seeing is garnishes being issued on merchant facilities, which is quite interesting.
Can you just explain what that actually means in reality to
So
a small
that
business?
So if a small business is a retail store or a bakery or any sort of front of face shop that has a merchant facility, every time someone taps that merchant facility, there's a percentage of that goes to the ATO and gets sent to the ATO daily.
So the ATO is effectively, by a garnishee order, effectively, taking a percentage of your revenue ongoing. We're not even talking about, pinching, or putting a bill on the end of your fin year. They're actually pinching money out of your pocket as you're trading, which sounds absolutely
Yeah,
ruthless.
and that can be up to 30% of your daily income. It's quite a lot.
And does that put some people into, can that put people into liquidation? Like if they're really
Oh,
struggling.
that can certainly put a huge strain on a business. Absolutely, that's one of the methods that can definitely put a strain on the business.
Wow.
Once they get into a payment arrangement, though, the ATO will remove that garnishee.
Okay, so this is just a tool just to get them back.
It really is. The garnishee, ATO have always used garnishees as an engaging tool. It's a very harsh way to engage, but usually the ATO have made several attempts at engaging, haven't been successful, have checked their systems to see whether there's a merchant facility or a bank account somewhere. They may even issue the garnishee to the employer
Wow.
if they know where someone works. Which is never ideal because sometimes you don't want your employer to know that you have a tax debt. So, but they do have the power to issue, and they have done before. I've seen it many times.
Tax office seems to have the power to do whatever they want, I would say. So,
Issuing director penalty notices. We're seeing a lot of companies that go into liquidation, and then the director will receive a director penalty notice so they actually think that because they're liquidating the company that they've really moved away from that part of their lives and they've moved on with their lives, and a year later they'll receive a director penalty notice from PAYG that they didn't pay during the directorship of that company, and that can be a really nasty surprise. But they have the power to do that because that director penalty is not a standard, it's a lockdown where they lodged their particular period 90 days late,
yep.
which means it's an immediate lockdown and can be issued at any stage, even after a liquidation.
Wowee. So, to be clear on that, it sounds like essentially the ATO can come after you personally, despite the fact that you have closed the company and you go, you feel like you wash your hands and you go, okay, cool, not a great experience, but at least we're out of there. At which point you're saying 12 months later, the ATO are coming after you personally and saying, I assume they have access to your personal assets as well. Would that be correct?
Correct. Yes, it's a personal liability, and sometimes I've seen a recent case where it was 12 months after, but I have seen and heard of ones that were years after. So they have the ability
Wow.
to come after a director at any stage.
Something else that I've seen recently is talk of them getting into the data at Equifax and Ilion, the credit bureaus, and essentially the ability to, do damage to your credit score based on your tax position. I mean, this is something that hasn't happened yet, but, do you know much about that? Is that coming or?
It's happening, Jack. It's happening a lot, a
Oh,
lot.
okay. Tell
I
us.
have to say,
Yeah.
I've seen it almost in every second client,
Wow.
where they've been reported to the credit bureaus for a debt that's over $100,000,
Oof.
or and they haven't engaged for 90 days. So
Okay.
the good thing about that is that once you're in a payment arrangement, it takes 7 days and they're removed from that list.
Okay. All right. So we seem to be getting a pretty consistent sort of view of these guys, which is one way or another, you're going to pay your tax. That's the first thing.
Oh yeah.
But they also, I don't know, to me, they seem to be reasonably fair about it as long as you're playing the game by their rules, which is, whether or not, you don't, you got to pay it back at some point, whether it's on a arrangement or whatever, but you just got to keep them in the loop, no different to any other creditor.
Absolutely. They're not going away, they're not going anywhere. And they're very aggressive, and they're actually like a well-oiled machine right
Mm,
now.
mm.
You can almost bank that after a firm action warning letter, you're going to be issued a garnishee within 21 days.
Well,
If you haven't actually called and engaged with the ATO straight after receiving that letter.
so it seems more and more, these guys, the ATO, almost have the same power as any other, lender, really. It just feels like they've got the ability to, smash your credit score, give you inability to borrow in future, transactions, whether it be personal or commercial borrowing. Let's talk about. I want to talk about the borrowing aspect of it because this is something that's really interesting. And someone described this to me once upon a time, which is, the ATO can sometimes be described as sort of like the little Jack Russell, which just sort of like barks a lot, but maybe not so relevant anymore because as we just talked about, they sound pretty
No.
ruthless. But they're the barker. But then you've got the banks, which are kind of known as almost like the Doberman, which is they're the big enforcer in the sense that if you're not up to date and in good condition and in good standing with the ATO, the banks won't deal with you. At which point they're effectively enforcing the position at the ATO. We're in a position where a lot of small businesses have got a lot of tax debt and arrangements, and I would say traditionally in the past, that's because, particularly in flat interest rate environments, that's just because people couldn't manage their money properly. Whereas I would say today, that's not quite the case anymore. People are trying really as hard as they can. We're in the cost of living crisis. We've got the most, the highest rates of borrowing that we've seen in terms of rate. And people are really they're not trying to flaunt the rules. They're really trying as hard as they can, but they're just trying to clean everything up. And that's, I'm seeing that is really interesting from a borrowing perspective, which is one of the four major banks that I'm dealing with has got a blanket rule right now, which says if you've got any sort of ATO arrangement or arrears or anything at all, they won't lend to you, which I think is, if I'm honest, I think that's a bit heavy-handed. Australian banks have got, a responsibility to be working for the Australian people. That's how economies grow. And I would say if you can't, just because you've got an arrangement, the requirement might be there to have to clear the arrangement, for example. I think that's fair enough. But just to say blanket, we won't clear it, we won't touch it, we won't do anything with you at all. I think that's a really bad, not a good look for. I think banks need to be supporting customers at the minute. And I think customers have got a really long memory.
Yeah, no, I agree with you. I think if they're going to pay it out, why not? And they can service it. Why not? Sure, you don't want to, part pay it off and then have them in a payment arrangement for the balance. That wouldn't work for the bank. But I think there's nothing wrong with paying it out if they have the ability to service the loan. And especially if you're a long-standing customer of that bank, you'd be very disappointed if they didn't help you.
I totally agree. And just this blanket rule of, we will not support if in any way, shape, or form, if you've got that. I think it's fair enough to say previously or in the past, if you take that hardline approach on tax, where you go, we just won't support in any way, that was probably okay maybe 5-10 years ago, because the assumption was if you've got a tax arrangement, you are presumably not paying the tax man to go and buy more personal assets, for example. And I support that you shouldn't be helping those sort of people. I agree with that. And that probably makes more sense in a flat interest rate environment. But in a growing interest rate environment where people are working really hard to get back up to speed, I just don't think it's a good hard and fast rule. I think we need to look a little bit deeper into why they're sitting there or how these arrangements have come up. And I've got the instance of that with a client as we speak. So, yeah, it's an interesting one.
It is interesting, and it does force people into that non-conforming space where they're having to pay very high interest rates, and if they default, they nearly have to give up their firstborn.
That's the irony of this sort of stuff, which is the majors won't pick it up. But the non-conformers like your Liberties and your Peppers, Latrobes, those sort of guys are happy to pick it up. And the irony is, the deals will still get done, and there's potentially instances of people where a major won't pick them up because they've got affordability problems. But then a second tier will pick them up because they're not so worried about that sort of stuff. But the irony being, they're going to be even further stretched because the interest rate's higher, which working like this is so counterintuitive.
It really is.
If the ATO was to set up an arrangement for you because you don't have the ability to pay off your whole tax debt in one go, do you just want to quickly run through what that looks like and the process and how they will, approve or decline something like that? Are they interested in cash flow? Are they interested in affordability of how much you can put into it? Will they verify that you really can't pay it back today? Like, what does that look like?
So there's so many different scenarios. Where do I start? So obviously there's review arrangements that go for 6 months, and they allow them for an event that's occurred, and you might be waiting for settlement. So, for instance, I've got an asset, I've sold a house, it's actually sold, but I need 90 days. It's a 90-day settlement. The ATO will approve a review arrangement if you can prove that you've sold that house.
Wow. So they're really working like a lender. Like they're actually really looking at your cash flow and your exit strategy and that sort of stuff.
And they're coming down very hard because they used to actually approve those review arrangements just if you had the house listed on realestate.com, but they won't do that anymore. They want a sale and then they'll approve it. So a bit mistrusting there from the ATO. The other one is, it depends. Sometimes you get a client and they say, we want 2 years of financials to support our payment proposal. In other instances, they'll say, all we need is capacity to pay information, which is really just monthly expenses and monthly income. And then they're happy to have a look at that. And if it all adds up, they'll approve a payment arrangement.
Question I've got on that is, if you are in a position where you don't have the affordability or for whatever reason you don't tick their boxes and they don't approve a payment arrangement, if you as a small business owner don't have that cash to pay and the ATO says we're not interested in, helping you or putting you in a position where you can pay us back over time, there's really no more, options for someone like that. If they don't have the ability to access capital and the ATO is not allowing them to cash flow it out, the only real outcome that they've got left is to, call insolvency.
Yeah.
Which
Absolutely.
I don't understand the point in why, then the ATO's got to work on chasing the money through, insolvency and potentially chasing personal assets. It gets messy. like, wouldn't it be easier to
They've
work with the
got,
client to come through at the other side?
I think there's a lot more work involved in that, and there's a lot of back and forth there as well. So, I mean, they'll try to collect the debt as much as
Mm.
possible, but if clearly the business doesn't have the ability to pay it back, cannot service a payment arrangement, then the ATO consider that entity insolvent, and they have a
Mm.
duty to make sure that that company is wound up.
Okay.
Because if they're not winding that company up, then it's very likely that company will increase all its debt, not just ATO debt, but everywhere.
Okay. So you were at the ATO yourself.
I
Um,
was. Don't
was
hold
this
it
one of
against me.
your? Yeah, I was going to say, was this one of your? Was this a good time or a bad time in your
No,
life?
I often say to people, when I started at the ATO, I loved my job there, and I worked at super. I was a debt collector for superannuation, so I took a lot of pride in collecting superannuation because I really did feel like the work that I did allowed people to retire. By collecting superannuation from employers, I was making sure that people retired comfortably.
That is good. Actually,
Thanks.
it's annoying to give a ATO agent credit, but there you go. So let's talk about your business. When you obviously left the ATO, and you now work on you're on the good side, which is now you're battling for the man, which is good. Tell us about your business, and tell us about what you can do for people that are in this position.
Okay. Well, my business is designed to assist people that have tax debt and have payroll debt. We assist with state revenue office as well. So it can be all sorts of tax. It can be income tax debt. It can be BAS debt, GST debt. It can be an objection to a Part 7 penalty, because I'm not sure whether you know this, but when businesses are audited for superannuation, the Part 7 penalty component starts at 200% of the actual superannuation debt. So I'll give you an example: $100,000 debt, $200,000 penalty. So
Oof.
the company might be able to come up with the $100,000 debt to pay off the superannuation, but then they're left with $200,000, which can send them into liquidation.
Absolutely.
So we put in objections to those. Obviously, we meet with the client, make sure we understand the situation, what happened for them, and then we lodge objections to those Part 7 penalties to help. And look, a reduction in that area really does help them to continue to employ people, continue to run their business,
Hmm.
and really draws a line in the sand. They get to start off fresh without going through insolvency.
So, have you got an example of a client that's been the case? And if you do, how much of that payment or that penalty were you able to rescind?
Okay, so recently, the reason I brought it up because it's front of mind.
Yeah.
So I did one just last week, and it was a $213,000 Part 7 penalty.
Ouch.
So it was a lot, and it was life changing for her. And she does employ quite a lot of people, so allows her to continue to do that without the stress of considering liquidation.
Yeah, for sure. So does that mean? So does your business? Do they take a chunk of that out, or do they wipe the whole lot, or like how
So
good is tax debt solutions with the ATO? How good is the relationship there?
So well, we have a good relationship with the ATO. Obviously, we talk to them all day, every day.
Yeah.
So our relationship is very good with them. We don't deal with disputed debt, as in people saying, "Oh, that's not my debt." We don't deal with that. We don't. We try not to muddy the waters. We don't. An objection to a Part 7 penalty is really not disputing the debt. It's saying we've paid the actual debt. We just need the objection looked at because the actual penalty is going to ruin us. So, but yeah, we have really good relationships with the ATO. Yeah, we'll just leave it at that.
What's is this something that a client's accountant can do? And If
Good
it's
question.
something that they can't do, what's the difference between what you can do and what an accountant can do?
So the difference is this: ATO are not. So there was a time when accountants could put in a remission application via their taxation portal, and they were so used to getting it across the line that they would advise their clients, and this is generally speaking, of course,
Sure.
they'd
Yep.
advise their clients, just pay off the primary debt and don't worry, we'll put a remission in for the interest and we'll get that back for you. And that really 99.9% of the time worked.
Mm.
Now, this is not the case. The ATO just have really changed their approach. They've come down very hard on remission applications. And so it's taking up a lot of time for accountants to do what would normally take no time at all.
Mm.
And not just that, but the accountants, they're so not used to doing it in a very comprehensive, detailed way that the applications they are putting in are falling short, and the ATO are refusing a lot of them. We're getting a lot from accountants that are saying, the ATO are just refusing it. Can you have a go at it? And
Is it too late at that point?
it's difficult. It's really, really difficult. Obviously, when the ATO make a decision, they, getting them to have a look at their decision or to request another application can sometimes be very complicated. They are open to looking at another application as long as you provide additional information. But we prefer to have the first go at it because it's all we do. We spend all day putting together very comprehensive, detailed, well supported remission applications. And success rate is really high. So that's the difference between us and an accountant. This is all we do. An accountant does, a varied amount of tasks, and this is not something that they spend a lot of time honing. And we've honed this skill.
Just so, I've got the dog next to me. She's gone nuts. Um, just so people are clear, so the way you work and the way your business model works is if there is no benefit for the client, i.e., if you're not successful, you don't cost any money, do you? Yeah, okay. And that's super important for people to understand. I think as well, the whole thing that we seem to be learning here or through this conversation is be proactive. Um, First of all, be proactive paying your tax. And if you haven't done that, which you wouldn't be Robinson Crusoe, particularly in this market, and it's not necessarily a matter of I couldn't be bothered. I'd say in this market, traditionally, the ATO has probably been the last creditor to be cleared. You pay the home loan first, you pay the business loans and whatever else you've got out there. And then traditionally the ATO in the past has been the one that you just sort of leave to last and everyone goes, oh, they'll be right. But in reality, they're probably, based on what we're talking about, as important as any other secured or unsecured creditor. So then from a proactive perspective, again, I would say if you're in that position, get proactive about it, call someone like you. And, the quicker you can go, that's a problem, we need to get that fixed, I think the better you're going to be with the ATO.
Oh, yeah, absolutely. The earlier you engage, the more options you have available to you. So if
Yeah.
you find yourself in an area like firmer action, your options have greatly reduced. If prior to that, you would be in an area called early intervention. If you come to us and we find that you're in that area, you have a lot more options.
Yeah. Okay. So prevention better than cure, but if cure is required, you're the one to speak to. It sounds like.
Early intervention is always good.
All right. Awesome. Well, thanks so much for joining us, Josie. And
Thank you. Thank you for having me.
tax is obviously not everyone's Saturday night topic of choice, but I think it's if it can make a more effective business, and let's be honest, based on what we're talking about, tax is, if you have to set up payment arrangements or they're taking chunks of cash out of you or whatever, it can affect your cash flow. Cash flow is probably the biggest pain point of Australian businesses. So it's just another thing that's really relevant in the conversation of running a business. So thank you so much for sharing all of your insights with us. I'll leave your details on the show notes. And if anyone needs to speak to you about fixing some of these issues up, they can get in contact with you.
Thank you for having me, Jack, and take care.
Thanks, Josie. I'll speak to you on the next one.
Thanks.